introduction. Welcome to our live profiling Q&A session. We do these about every week, unless there's some live stuff that happens. Always want to be reminded of the risk in trading. It is one of the only things that you have control over. You likely can't control where price is going to go, but you can control how much you're willing to risk as you express opportunity or go after opportunity. And you can also determine where you want to place that risk on, but be mindful of the risk, especially within futures. You can lose more than you have in initial investment. At the top, we always talk about the idea that there are a number of different ways that you're looking at markets, and how you're determining opportunity, how you look at risk, how do you essentially look to play. And there are a number of different approaches. All of them can be valid. There's a fundamental approach that would basically look at, hey, I think assets are overpriced based on fundamental reasons. I'm seeing economic things going to so for example, I have a friend who has been buying SPY puts because he believes that there's a disjointed difference between where current prices are and where the economy is going, and so he's trying to leverage that. It's a fundamentalist approach. Or somebody who sees a massive earnings report that's really bullish in a company and they want to buy that. That's a fundamentalist approach. Technicians look at price, certain patterns, and so forth. And profilers interpret behavior. That's what we are. We're behaviorists. We're not. When we look at the indicators that anybody can look at in the market, all we're doing with the profile as a tool is we're trying to arrange price and volume, which are the only two indicators that absolutely every market participant looks at. So by being able to see that, that's given us some edge, helping us see where there's an accumulation of volume at prices to let us, then that tells us something behaviorally about what we want to do next. We'll look at some examples about that today. But I always love this quote from our buddy Tom and Corvia over at Blue Tree Strategies. A couple further welcome and introductions. I'm Josh. I'm the founder of Trade with Profile. We've been doing this thing for about 2 years. Also with me is JP, and between the two of us, we've got enough years in the markets to have made every mistake and hopefully learn from most of them. Our process and what we do at Trade with Profile is really to help build trading skill and consistency. So if you are working on consistent profitability, okay, not guaranteed profitability, there is no such thing. Despite whatever YouTube video that you've seen, or someone who is promising that you'll never lose, you absolutely will lose. And you will absolutely not have 100% profitability. Now, can you have an 80% probability of profitability in a trade? Absolutely. You actually don't need that high to be profitable, but you do need to be able to define trades and to be consistent so that you can consistently go to the market and extract capital from that. Everything that we think about and how we approach every day is broken down to something called the Profile Trading Development Pathway, which is really just to arm you with the ideas and concepts and principles that we use every day so that you can build your own trading plan. And it really all coalesces around these three ideas, is that when it comes down to it, if you're going to be successful in markets, whether you're going to trade like us and trade futures, or you're going to trade options or whatever, there are really 4 behaviors observable in every auction, and you need to know how to observe them. That the auctions have a beginning, and then there's a move. That's the first behavior. Then they come into rest. You might call that consolidation. The move you might call a trend. They come into rest, and then there's something called a test, where the auction is testing to see direction or new direction, and then there's another move. Like, those are the 4 behaviors, and it's over and over and over. It goes like that. There are 4 questions to ask and answer before you put a trade on. And you do this before you put a trade on. 1, what's the opportunity? We always start with the opportunity. What's the target? Is it a reasonable target? Is there rationale behind the target? Is there edge in the target? Is it objective? 2nd, what is the risk? How much am I willing to risk for that target? Okay, I see an opportunity in the Nasdaq for 30 points. How many points would I be willing to risk to go get that 30 points? Would I be willing to risk 60? Would I be willing to risk 5? What is my risk appetite? What would tell me that I'm right once I put the trade on? So what's the narrative that I built? What would tell me that I'm wrong? Those are the 4 questions. And then the 4 stages of auction competency and how to know which one you're in. Stage 1 competency in the auction, and really in any endeavor, is an unconscious incompetence, where you really just don't know what you don't know. No fault of your own. You just haven't had enough exposure. And then as you're going through a rigorous process, you'll go to stage 2, which is a conscious incompetence. Basically, you're like, oh, there's all kinds of things I don't know, and I need to know them. And then stage 3 is where you have a conscious competence. You've integrated into yourself the processes and the tools that you need to be successful, but it's not yet instinctive, and that's where stage 4 comes in. Stage 4 is it's a unconscious competence. You can do things instinctively because you have internalized them and you operate out of that internal instinct. Works really well. Where all of those 3 overlap, that's where we find consistent profitability. And it's not something that's done overnight. Contrary to what you may have heard or even led yourself to believe, I at once believed that as well. It is not something that happens overnight. It takes time. The challenge is always like, what do I put the time and effort into? And this is hard because trying to sift through all of that is a challenge. Each day we work with our development community, taking all of these concepts and putting them into action. And because at the end of the day, we have to look for trades and develop the trades. We do that through something we call a trade plan. And that is kind of the sum of what we do. Today's session is kind of a culmination for the end of the week. So we have people on the call who are part of our development community, and we have people who are just learning profile and trying to get used to that. So we got a couple of questions that we're going to look at, and try and do this with live markets always so that we can kind of see, hey, where are some potential opportunities? What's the likelihood around that? And how might we use that for our benefit? And with that, we're going to get back over here to some live markets. And looks like NQ is trying to make an attempt lower. The overall narrative today for both the NQ and the ES was lower based on rejection of higher prices yesterday. The auctions had moved away from balance. I'm just going to pull over my tool here. So you can see here, this is a volume histogram. This represents the accumulation, the composite volume at price for a specific time frame. Okay, and this is about 5 sessions. I need to actually update the one here in the NQ just to get this week. Let me redraw this here real quick. Okay, so what this is going to show us there's a couple really key levels here in the Nasdaq. The most important one of the last week is down here at 78, 75, 78.90. We also have a prior day's point of control down here. And what happens, overall in the auction is there's this movement between prior value and new value. Okay, so when you come in, each day, the question is, the thing you're trying to discern as you're building your plan is where is value and where is the auction respecting value. So over the last week, this has been value, the 78.75. So right now we're above that. However, yesterday value was established at 79.30. We're now below that. So we're between 2 value references. So if you're below yesterday's value, one of the ways that you could play this is you could say, well, I'm playing off of the longer term value, the value that has more data built into it. Therefore, it's a bigger magnet. Okay, and if you can see this this open, high, low, close bar, we opened and then rejected lower yesterday. So this is what we call rejection. There's also the form of daily excess, meaning the auction has attempted into an area and failed, closed below its open. And when that happens, more often than not, the auction is given confidence to express in the other direction. So the plan and expectation for today is really that we head this way. I personally am a little bit short, have been short really since the open around the 45 area. I was looking up to the 60s. That was an area I would have been more aggressive at. And looking for a return back here. First target actually is down here at this untested point of control from 2 days ago, which we'll pull more the more that we can get below yesterday's low. We're still inside of the Globex range in the NASDAQ. There's a 97% chance that we will exceed either the overnight high or the overnight low. I'll let you guess which odds are favoring, which side are favoring right now. And that's kind of the play. Crude oil also is in balance. You can see this large node right here. It also rejected, but yesterday it stayed inside of its Globex range. stayed inside of its Globex range and balanced, and then was even tighter in Globex. So this auction is getting ready for a move. In fact, they trapped some traders early today with an attempt away from balance and then failed and came back. That actually should queue up energy to move lower. We still have a massive gap from the beginning of the week based on the news from Saudi Arabia. Personally, I'm kind of only yet interested up in this area or down here. And the reason for that is, when we have an auction that's in balance, you're going to see lots of attempts away from balance, what we call false breaks, and that can chop you up. So sometimes it's better to let them try to get away from balance significantly, express an opportunity, and then look for a potential short-term fade or what we call a responsive trade after they've exhausted a little bit. But that is what we're looking at as far as that goes. Looks like ES is back below its open. SPY made a new all-time highs yesterday and rejected, and the ES futures correlate to the SPY ETF as well as the SPX index. So they all, you can kind of express opportunity through all of them the same way. We just do that through the futures themselves, and that is what I'm seeing at the moment. So we had
an IB break on Nasdaq.
Yeah, and what that is, getting an IB break, if you're just getting used to the profile, is the first hour's range of price. We call that the initial balance. About 80% of the volume for the entire session, full electronic session, the 23-hour session, happens and is traded in that first hour of what we call the cash open, or the RTH hours. And there's a 97% chance we'll exceed that range on any given day. You can see we're honoring that stat right now. We've exceeded that. That also helps kind of tilt the favor of who has control of the day. So now that we've extended the IB low, that's definitely tilting the favor and confirming that there are sellers as expected in our plan this morning. And so that gives us actually some opportunity to tighten our risk. So if you weren't short yet, we know that we've got these areas down here to look for. You could look for opportunities back up towards today's value to trigger short if those come before we get down towards the target area. And then you would be absolutely wrong if we come back and trade above 43. So now all of a sudden you could think, all right, well, if I could get to 30-ish to be short, I could risk about 13 points and still have an opportunity that's about 50 points or so wide. That gives you a pretty cool opportunity in terms of reward and risk. It's also an objective reward and risk definition. And that's kind of, where I would look to potentially add to my short is if we can get pullbacks back up towards today's value. I would not short down here because, again, we do have quad witching. So I would want pullbacks back into the IB that invite more sellers as an opportunity to join them. I'll turn on a little bit of short-term stuff here just to kind of see. Oh yeah, so big selling spike here. So I mean, you could look for potential responsive opportunities up into this area, and like that's kind of a line in the sand. See if we get some light buying that comes back in this area that then rejects back out. That would be some decent opportunity. No, not really any good excess yet here on the low. We got a little bit of lower contract volume. Did about 3,000 contracts at the point of control. So if this auction is going to continue to move in this direction, if we're going to accept these lower prices, we're going to need to migrate value for today, which means it would need to migrate from up here to down here. That could mean that we'd have to trade sideways and have to do about 2,000 more contracts at these prices to be able to do that. Otherwise, we rotate back to value. So that's kind of gonna watch and see what will happen there. And then while we're on this, one question that we had just to kind of kick off our question of focus, now that we've kind of defined what we're looking for here, was about the trade we took yesterday. And so what I'm going to do is just going to turn this on, include yesterday. Then I can kind of show you what we were looking for. So one of the trades that we look for often is something they called an IB extension fade. And this is where you've seen the extension of that initial balance. So here was the first hour's range right here. And you could see that value was doing a good job migrating higher. And then we got outside of that range up here and then swiftly rejected, had some strong selling pressure right in this area, balance for about half an hour, attempted higher again, and then rolled over and rejected, which is then confirming kind of a change in hands in the auction. We made a new 30-minute low here. Gives you confidence that the auction is not going to reject. And it was at that point, kind of on this rollover right here, is where there was opportunity to get short. At the time, what you're looking for, we were looking for 29. That was 2 standard deviations of VWAP, which is another metric that we look at. So that was kind of the target area. This was the entry area. Here was the initial risk. Anytime you're looking to enter a trade, you're always looking to find impulsive activity in the direction that you want to go. Okay, and you can, sometimes you can clearly identify those in an elongated 5-minute period with significant volume and order flow. And what I mean by order flow, and if I zoom in here, so these yellow numbers represent the difference between volume placed on the bid versus volume placed on the ask. All right, so if an auction's moving aggressively to the sell side, they're going to hit the bid. They're going to sell at the highest available price that they can sell. If they're going to be aggressively higher, they're going to hit the offer, the ask, and they're going to buy at the lowest possible price that they can immediately buy. The difference between those is something that we call BidAsk Delta. And it can help you see significant and impulsive activity. And just like in the law of thermodynamics, impulsive activity should get follow through. It should get, once I have inertia, that should continue on. And one of the things that, to notice in terms of a change of hands is like on this attempt higher, this had, and by the way, a negative number on this platform is actually positive delta. A positive number is negative delta. So once you kind of work that in your head, you'll be fine. But here was an impulsive number higher, is actually the highest number from a delta perspective in about an hour. And that number was immediately rejected by a larger number to the sell side. That's a great indication that the auction has been shut off directionally. Okay, and once that's taken place, then you're looking for further acceptance in that direction. So all of this is confirmation that they're doing a good job holding this rejection. And then what you're looking for is you want to see any activity back towards the area of rejection to be weak. Okay, and we did. We had weak buying numbers that then were taken out by a very strong, again, selling number. So that's the kind of thing that you lean into, and that's what you defend. And so you can have a stop either one tick above this or one tick above the base of this, and then you're looking to sell and be active either as soon as they made the new 5-minute low, as I was looking to get into, because I was already prepped for that based on what had happened here, or you could actually add to the trade, and we did in fact add to the trade as they held in this area. You had another situation like that, some weaker area, and then a new 5-minute low right around 53 here. You would put a stop above the new add here as they're working towards that 30 target. Okay, so that's how you can significantly increase the success and confidence and positive expectancy while you're in the trade. It also can tell you that, hey, if I trade back through these areas of rejection, then something has changed in the market and I should exit. It could be an economic catalyst, it could be a news catalyst. You know, we live in an age right now where we're very much susceptible to headline risk that could happen at any moment. So it definitely always be trading with some stops. But this also helps know, okay, I know why I'm defending it and where I'm defending it. Because if I'm leaning into other sellers in this instance, so if those sellers get nervous and get out, I'll get nervous and get out as well. And then I'll look for a potential additional opportunity. Mark, your question, what are these blue lines? What this is what it's called dynamic value area and point of control. So what it allows me to see is, as the day is going, where is the bulk of the volume and value, how is that migrating? So the volume point of control is the yellow line, the blue is the value area high and value area low. I use a pretty tight value area. People historically in profiling will use about 70%, 68%, like a standard deviation of value or volume. I get a little bit tighter, so I'm typically looking for 50% of volume, just so I can kind of clearly see, hey, we're trading outside of where most of the volume is taking place. And then that's a good opportunity for me to be mindful of that. That's also why, like, once you start getting going in the direction of the trade, this is where you're starting to get aggressive on your stops, because you're now below where the bulk of the volume is, and it could easily revert back. Good question. Awesome. Okay, Peter, I see a question. So how do you determine your posture and select your viable strategy to use?
We guess.
Silly. We don't guess. We actually, and we've done several seminars on this that you're welcome to go back and search for, but specifically around context. So if you're on our website and search for context on our blog, you'll find a number of times we talk about this. But people often talk about context. Traders talk about, well, you got to know the context of the auction to know where you're going to be active, but they don't really define what context means. Okay. We use 3 variables to help us discern context, and that is that we look at the last price. So like right now I've got 79.14. That's a variable. Then we look at where is the most traded price of the last week, and it's an arbitrary number. It's fine, but what that represents is it's at least allowing you to identify how is price auctioning around value of recent periods. So we'll use the last week. Right now that's 78.74, and then we'll look at where is the most traded price for the last month. And I'm just going to pull up my quick sheet here, because this is part of my planning process that I generate every morning.
Also, before you finish that question, I want to answer the second half of that one, but go ahead.
This morning, 78.92 was the monthly value. So we're actually in what we call a posture, and this is kind of our own language that we use to represent where we are in relationship to these 3 values. So overall, the belief is that the auction, as long as it's holding above this area down here, is looking this way. Okay, so then you're asking, okay, well then why am I looking short today if my overall belief is to be long? Well, I'm looking to be long as I'm holding these prices. So in a shorter time frame, I can see price rejecting, and actually this could be the pullback. That could actually be a fantastic buy next week. Is if watch 3K in the ES next week, watch 78.90, watch 78.74 zone in the NQ next week. That could be great opportunity if tested, that then becomes the power for the next push higher. But then intraday, I'm using a setup like in this case, I'm leaning on something called an IB extension go with, where we've extended the IB low, and I'm looking to go in the direction of that to clean up some prior structure, specifically this naked point of control here, and look if that doesn't. So I'll be looking to cover my short down here, also trailing where some impulsive stuff is. So like right now, there was a little bit of a pullback here. So I'm now protecting 25 as my stop, and I'll continue to trail that as I move towards the target and we get into new ranges. So you kind of start with the overall context, but then you're looking for specific setups that you have that you're expressing inside of that as the auction is doing its price discovery process. Anything you'd add to that, JP?
Yeah, we just don't pick I guess I thought that was an interesting question, and select your viable strategy to use. I usually say this every week. There's really only 3 strategies you're ever going to use in trading.
Yeah.
If you understand the auction process, or just, I say, you know, it's an auction, there's no doubt about it, or just how the movement of the market works. Okay, we have, you know, and this is how we pick it. We have three strategies, basically. We have a reversal strategy. Okay, we have a breakout, and that's what Josh alluded to go with, right? We'll be looking for those. And we have we have pullback strategies. Okay, and really that's the only 3 you can use at this point. And anything that somebody has an inside, you know, break type of situation, that's a breakout. You know, any way you look at a trade, it's one of those 3 trades. Now, how you come to that trade, how you trigger into that trade, that's a different story. So we only have 3 different types of trades, basically. Now, we name our trades, you know, have cute names for them and stuff like that, but we'll use one of those varieties with the trade, and it depends on the direction and how we get into the trade. So I think Josh can agree, we're both not very good breakout traders or go with traders, right? I'm like a pullback, honestly, and I love a reversal. Okay, so I'm probably going to lean on those types of trades, and if the bias doesn't give that to me, probably sitting on the sidelines.
Yep.
A good question.
Yeah, great question. Aaron, I see your question about fib levels. Yes, we do incorporate fib levels only in this instance. So with equity markets like we have here in the Nasdaq and the ES that are at all-time new highs, so their price is higher, we never traded. So how do we discern potential decision levels or expectations at those higher prices? And in that case, we'll use Fibonacci's. I like to use you know, just Fibonacci extensions at like 50% extension, 100% extension, 200% extension off of a, you know, like if I can see a move, and then, for example, let me get over here to my ES planning chart here, and you'll be able to see this because I actually have one still on here, I think. Yeah. So this is a daily chart that I have, and you can see that I've essentially, because, you know, their price is higher that we've never traded. So trying to pick those. Here's a swing low here, watching for the auction move higher, and then a pullback low here, and that gives you your extension. So, you know, there's 30.31, 30.46, 30.62, 31.12 are potential upside targets. You know, based on this. And now I don't select as many intraday. I don't typically intraday trade the ES, so I'm looking for more swing potential targets of activity. I'm just using a simple fib extension. It's helpful. The other part of that is that's what the desks are using as well. So, you know, we tend to use tools that guys like Credit Suisse, Deutsche Bank, Goldman Sachs, and so forth would use. And that's a pretty consistent tool in the wheelhouse when you're in prices that you never touched before. Otherwise, we would always select levels based on prior auction activity. And you can see all of our lower decision levels are prior auction activity.
Yeah, and not saying that Fibonacci's are wrong, because they're not. I mean, if you use them and they correlate with like high volume areas and other where business has been done in the past, I see nothing wrong with it. But I don't personally use them either. The only time I use them is what just Josh outlined, is when we have no levels, no previous history there or anything. So then you got to look for something, and again, I'm a caution. Here's a quick tip on that too. That doesn't mean you've so up above. Obviously we're getting really close to all-time highs again. So once we start trading above those all-time highs, and you have a fib level up there, that doesn't mean step in and take that trade.
No.
That just means start to watch it. and then whatever you use to trigger into a trade, then maybe that's what you could, you can go ahead and do that. But I'll always say, make sure it's in your plan. Everything, what your plan is. In other words, what's your type of trade? Is it a reversal? Is it a breakout? Is it a trend pullback type of situation? And also that depends on your time frames. We're showing you one time frame here. Your time frame may be a daily chart or weekly chart. Your time frame may be a 1 minute chart. Wouldn't recommend that, but it just depends on your time frame. Everybody's time frame is different. You can see it all in time frames. So just keep that in your mind when when you listen to what we have to say. I mean, we have good stuff, man, but but keep everybody's time frame is a little different. So
that's right. Yeah, great question.
I trade off a 30-second chart. No. I've had 500 round turns already today. No, I'm kidding.
Well,
no,
dude, Pax does.
Yeah, well, he does. It's a 1 minute break. I think he does now.
30-second. He's still 30-second.
Is he still 30? Okay.
Still 30-second. Yeah. 30
well, if it works for him, it's. I listen. And so, what is that? 30-second breakout? That's a breakout trade. It's a go with trade.
It's a go with trade. But his target's like 4 points. He's looking at like four NQ points, something like that.
Yeah, his risk is really good. I mean, it's about managing your risk, right?
That's right.
I mean,
he's exceptional at that.
He's exceptional at that. And if you get really good at that, oh, well, then it's game over, Just get really good at managing risk. So
absolutely.
Pax 30.
Yeah, 4 points first target. Then he has second target. Yes. Yeah, exactly.
Yeah, he'll hold. And you know what? That's his trade. It's super simple. Now, and I'll just take, I don't know the guy. I've heard him on some interviews. He seems like a really good guy. He's an old floor trader, and that's what they used to do on the floor. Now, mind you, they didn't have quite the volatility that we have today in the markets, and we don't, that can play into it, but he has perfected that. Yeah. And I guess if there's anything to learn from that is that we tell the team members that we work with is, guys, get your trade and own it.
Yeah.
Okay. I think that's his only trade, if I'm not mistaken. And he does it on like 2, maybe 3 markets, and he owns that thing, and he owns it inside. Now he knows every step of it, how to manage it, how to manage your risk from it, how to push the trade. Mm-hmm. And you know what? If it works for him, that's great. That's awesome. It won't be my trade because that's just not my trade.
Yeah.
And is it wrong because of that? No, not one bit.
Yeah. Also, I'm
a terrible breakout trader.
On a time frame that tight, a couple things. You need exceptionally good market data. You need an exceptionally good, probably institutional class execution platform. So that means you need like trading technologies. You need CQG. You need an IQ feed data to be able to execute on that. Do not attempt that on something like Thinkorswim or Ninja data. That would be because at that tight a time frame, you're getting fills past where the market's actually trading, even at a millisecond delay. That's why even we encourage people to look past the first hour. Things are slower, and it gives you more time, especially as you're developing. Now, if you get better and better, and you want to integrate something like that as part of your playbook, man, go for it. If that fits your personality and what you're looking for, absolutely. And you're right, Mark. He does a fantastic job on risk management. And it's you're not going to stay in this business very long if you don't have really, really good risk management.
So let's talk about that IB. I think that's important. I will tell you, in my multiple years of trading, the one thing that changed my consistency, and this is all about consistently profitable. And Peter, I do see your email or your question. We'll answer that in a second. But it's about being consistently profitable. Okay, and it doesn't mean swinging for the fences. Trying to make $20,000 in a day. That may come with time, but it's not going to happen out of the gate. So you have to you have to hit singles a lot. Okay. So I'll tell you what I mean, and then I'm going to give you guys a challenge. Okay. when I became really consistently profitable, now I was working on the institution side for a while, and I was, Josh was a hedger. I hedged on the physical commodity side, and then also a little bit on the electronic side. So with that, we were using other people's money, so it's a little bit easier. Okay, when you use your own money, there's a lot of motion involved. Okay, it is. I'm not anybody tells me a trading institution money is not easy, they're lying. Okay, because it's not your money. Okay, the only thing you have on the line is your job. All right, and you don't want to lose that, right? So, and in today's world, you can't. It's not willy nilly like it used to be pre 2008. After Dodd-Frank, that all went bye bye. So when it comes to being consistently profitable with your money, okay, you got to have a plan. Okay, you got to know what you're doing. You have to really lock in and hone in on what your trade is, and know your time frames, know when to trade, not to trade. Okay, so when I became consistently profitable, I was doing a lot of trading off the open, and I was getting chopped up at times. Josh, I'm sure, can speak to the same. It was like, oh, you have a good trade, they'd whip it back and forth. The algorithms are trying to figure out the trades that are coming in, hitting the market early in the morning, and it's a little crazy. Like yesterday, we saw this massive run off the open. Well, there's nothing to do there. Okay, but we were patient enough to wait, and we got a beautiful reversal trade out of that. And what did we capture out of that one? Was it we got 600 per contract, right? Was it something like that?
Yeah.
And it was just a beautiful. It was no pain in that trade.
That's right.
What's that?
About 24 points.
Yeah. So there was no pain in that. Now, if I tried to fade that move off the morning, geez,
oh gosh,
Louise, I would have been killed, and then I probably wouldn't have the psychological wherewithal to actually take the reversal. I'd have been too scarred at that point. So, with that being said, the IB has helped me tremendously, and I've been using that IB since, oh my gosh, well before 2008. Okay, so whether you use the IB 60 minutes, whether you use like what PAX uses 30 seconds, or whether you use 20 minutes, I don't care what you use. Yeah. Just have something that's in your trade plan. You consistently use it. You know how it works. You know what to look for around those. Because when we have an IB, we know it's one of two things, right? We're either going to do an IB fade, which means the price moves out of the IB and then gets rejected, fades back in, and there's your trade. Or what we do is we either go with on the deal.
Yeah. For example, there's a short-term fade trade here, likely off of this engulfing 5-minute in Q, looking for, your target would be a return back to value. Okay, now it's most likely what's not happening today, but if that's the type of, you have IB low break. If you find a trigger, if they can hold in this area and get some more buyers to step in, you could target back to here. You could have your risk be below the low. That's an IB fade.
Yeah, if you go look, go look at a candlestick chart, a 5-minute candlestick chart, and of the Nasdaq on your own charts. Mark the open price, and then mark the 60-minute high and the 60-minute low. Okay, in other words, your IBs. And I want you to look at how many times price chopped back and forth before it broke down. Yeah. Okay, now we got below the open, like Josh said, he faded to 45, got down in below the open, and it held below that open. Okay, and when it did that, then it broke the IB low. Now here's one thing. If you're like me, I'll be the first to admit I'm a terrible breakout trader. But once it broke out, it actually pulled back to the IB. Okay, and there's a chance for me to defend that. I'm going to go ahead and defend the range. Then I'm going to fade that, and I'm going to take the IB again. Does that make sense? And Josh, can you pull that up? Let's take a look at that.
Yeah. Real quick. Here's the.
You put zoom that in a little bit.
Yep. So here's what he's talking about. Here's the break, and then they come back, test into it, and reject back out.
So we've now seen pretty much all the trades that we talk about. We had the break, which is the first one. You could have taken that. Stops have probably been just above that candle there, which had been about 79.30. You're looking for a decent risk reward. And then if not, then the pullback, which they don't always pull back, believe sometimes they just break and go.
Yeah.
And in the pullback there, you could establish again at the IB and defended that high candle, or and it would have worked either way. So now you had the break, you had the pullback, which is one of two trades, and now we're looking for the reversal, which is actually right now is happening at this point. So that's how the plan works, guys, and that's how, for me personally, that has, I won't say it's made me consistently profitable, because I was profitable. It just has made me more consistently profitable, and it's a lot less stressful. I can't speak enough about the stress. It's people say intraday trading is stressful. I don't know about you, John. I don't feel that way at all, you know? So if it is stressful, then we need to look at what you're doing.
Yeah, if it's stressful, that's likely because there's not a plan in place, and every price is actionable. And when every price is actionable, and they're not, they aren't all actionable, then that leads to that. I'm going to watch this 5 minute here. If they close this 5 minute with a little bit of excess, I'll move my stop down to the top of this 5 minute. And then if they pop through 20, then I'm out, which is fine.
So Peter had a great question. Profile composite in white. No, it's just a personal preference. He marked it white so it's prominent, and then he can mark his other stuff in other colors. It's just whatever you put on your charts.
Oh, he asks, is it larger time frames or smaller time frames? This one right here is about 5 sessions of composite profile. So that just helps me identify where are some bigger nodes. Sometimes you can look at a level on a specific day and think that is a more significant level. And then when you look at it within the context of several sessions, you go, oh, that really wasn't that significant of contract volume. And so it just helps kind of confirm, hey, yeah, there was some, like today, there was some significant volume at that 79.20, and the plan today was, hey, see where we are, it's around 79.30. If we're accepting below, which like right now we're accepting below, the plan is to look for that 78.92 area, and that's still the plan. We've had favorable excursion in that direction, and if we were above 79.30, then we were going to look for pushes towards 79.60, maybe even a reversal of the excess yesterday, and close on the highs. So that helped us kind of identify a key area, and also wait for some extension around that. This early chop. I mean, that's a lot of early indecision before they finally made the directional attempt with some strength.
Yeah. So these are all great questions, and Josh, I'm sorry. My wife came in and asked me a question. Did you cover the 4 questions earlier when we opened?
Yes.
Okay, so from his 4 questions, let's think about this, guys. I'm going to give you just a quick entry course, right? It's going to take 5 minutes. Yep. In trading, we want you guys to simplify everything. Okay, most people have way too much. And here's the truth. If you've been around the markets long enough, you already know how to trade. You really do. But you have too much information, because too much information is not a good thing. So let's look at let's just start with the 4 questions. The first 2 are probably the most important. Where is the market trying to go, and how good is it doing it? Okay, and then how do you tell that? Okay, well, we tell that by either a pattern or where we are in the maybe with respect to the auction. Are we balancing? Are we actually auctioning away from that and testing areas? And then that also goes back to what I said before. What does a market do? Well, it rests, which is called balance or congestion or consolidation. There's lots of different terminology there. And then it auctions away. It breaks out and goes in auctions, and it's doing what? It's testing for new levels. And either one of 2 things happen. It finds responsive buyers or sellers, or it finds acceptance and starts to balance, consolidate, or whatever the case may be. When you understand the works of the auction, then at that point, you can structure your trade plan around that. In other words, are you going to is your trade the breakout after consolidation? Is it a pullback after the breakout? Is it a reversal after a large move? okay? If you do that, simplify it, and then get a couple tools to help you read that, like Josh talked about order flow. Order flow is, in my opinion, I'm not saying you have to get it, I'm just saying it's, in my opinion, a game changer.
Yeah.
Okay, it helps me stay out of trades we shouldn't be in. Okay, and then, you know, obviously the profile, we believe in it because it shows where the business has been done. We show what kind of structure there is, and it helps us determine, is this something we want to do or not? So once you do that, simplify it, guys. Keep it simple, please. Keep it simple, and then know your trade. Know it, know it, know it. Understand it. Get under the hood of it. Track it. Understand the movement. Understand and then when you're testing it and trading it. And Josh and I have talked about this. Josh, what's your opinion on how many times you should take that trade before you put money on it?
Oh, 100
minimum. Yeah.
minimum.
I mean, I would say a couple hundred times, and because what's going to happen is you're going to understand that trade amazingly. So here's the, okay, so I said all that, and there's the 5-minute you know, intro to trading. So here's the challenge: find one trade, find the time frame you're going to trade on it, and I want you to take that trade minimum 100 times before you put live money on it. Okay, but while you're sim trading it, and I know people say, "Oh, you shouldn't sim trade. That's bad." I disagree with that. You're trying to get to know your trade. Once you know your trade, you can put live money on it. Sim trade it. While you're sim trading it, okay, so on the Nasdaq, I want you to make 10 points on the Nasdaq a week. That's it. I don't want the money to come into play. I want you to make 10 points. I want you to keep it. So at the end of the week, I want you to, and if you don't have 10 points, that's fine. If you have more than 10 points, that's fine. But what you got to learn how to do is also know when to turn it off. Enough is enough. Okay, I'm going to turn mine off here in 40 minutes. And that's my plan. I don't care what's out there.
Yeah.
It's Friday. So do that and learn also how to keep your money. Okay, it's not about making it. You know, Josh and I can tell you stories of guys who made just tons of money. I mean, just crazy amounts of money. Then turn around again and just blow it. I mean, through the market, not with buying things. Okay.
Yeah, if you want a great book that validates that, you could read The Hour Between the Wolf and the Dog.
Yeah. Very true.
Because your brain is actually wired to like, as you win, it's what keeps people going back into the casino.
Yeah.
And they will lose it all, man.
Yeah, and then I agree. I can't agree more. Tony, great question. This is, how does price discovery fit into your strategies? Well, price discovery is the market. That's what the market does. And so it fits into every strategy we have. It's not that we're looking for price discovery. If price breaks out, it's trying to discover new prices. Yeah. And maybe it's going back to an area where it has done business in the past. Hence why we use the profile. But yeah. So it does play into the thing. We don't write it in there and we're looking for this price discovery. That's not the language we'd use, but that's a good question.
Yeah, I would only add, you know, price discovery. So so today I'm in a go with trade, but it's also a reversal trade because we're reversing back to value in a longer time frame. So the shorter time frame value didn't hold. We're moving towards longer term value. And guys, my stops now are 1675. But right now, NQ is discovering price lower on the day. One of the things, if it's going to continue to go in that direction, just those two questions that JP said that are really important. You know, what direction is the auction attempting to go? Okay, lower. How good of a job is it doing in that direction? Well, if we're going to be able to keep going lower, we're going to have to, as we're discovering lower prices on today's session, we're going to have to continue to accept those prices or run the risk of reverting back to value for today's session, which could run us right back to 79.30. So, you know, if we can't shift value lower today, then, you know, which is why I'm pulling stops lower to protect this short as I get closer to my target, because I don't want this thing to turn around and run all the way back to me while I'm away from a value on the day time frame. So that's a way that we think about it. Mark, sorry, question. Do you ever look at the ES for relative strength with the NQ? We do. We look at all of the indexes. You know, especially around today, like it's been kind of a wonky day where we've had initial balance high extension in the Dow, I believe also the Russell, and yet no, Russell's still in. So Russell's still inside of its initial balance. The Dow made IB high extension, and then both NQ and ES have extended lower, which is it's a good way to see the day we expected, in the fact that it's quad witching. There's going to be some divergence in the indexes. You've got indexes going off and expiring. We've got some rejection from yesterday, so there's a whole number of those factors. Typically, as I think what you're alluding to, typically you're going to see strong directional conviction show up in all of those markets. And there are, when it's not a day like today, there are days where we may look at, I'm thinking even what JP last couple of weeks, I took a Dow short and a Russell short because the ES and the NQ were pushing, and that's where the volume is in terms of the indexes. And so the opportunity was sweeter in the Dow and the Russell, as it finally capitulated and followed the other two. So yes, we do look at that stuff. Okay, gang, we got 6 minutes. Any final questions before we let you go?
These are all great questions.
Yeah, great questions.
But truth be told, no, any question's a good question. People are always afraid to ask questions in trading because they feel like they're inferior if they did something wrong, or they made a wrong choice, or they're embarrassed. Don't be embarrassed, guys. Listen, everybody and their kid brothers made mistakes. I mean, Josh and I are not experts on this. What we're experts at is we've made every mistake in the book, and I'm pretty darn confident about that. But we've recovered. Now we understand what makes people consistently profitable, and hopefully we can cut your time to consistently, or what we call CP, down quite a bit. So any question is valid, guys. If it's embarrassing, we won't call you out on it. Of course, we're not here to do that. We want to make sure you guys get some help and don't blow your money. And that's the main thing. Don't blow your money.
Yeah. Hey, real quick, I wanted to look at the DAX, because I know that we had Lars register. He's in Sweden, and I don't think I saw him. I don't know if the time frame, if Lars is on here.
I didn't see him.
Didn't look like it. So everything that we talk about is applicable to every product, every trading product that's out there. Even if you are in time frames where it's hard to trade, like if I lived in Asia, for example, I would probably look at the DAX, the Euro stocks, the FTSE, the Eurobond as products that I would look to trade, just because it'd be hard to trade the U.S. products. Now, when I'm in Europe, I like trading a lot the U.S. products, because I can basically go do whatever I want during the day and trade the U.S. at night or in the evening. But I just wanted to look at the DAX here. They just recently rolled, like the others, from September to the December contract. And, specifically looking at, if we just look at our three variables of price and value. Now, it's going to be a little bit off because we've just rolled in this product. So to get a little bit better picture, let's go to the...
Josh, are you looking for 78.90 on that?
Yeah.
Peter, yes, stage 5 is a phenomenal brokerage for both small and large accounts. I don't think it matters. They do good with both of them. Would you agree, Josh?
Yeah. If for small accounts, I would definitely steer you towards stage 5. For larger accounts, I'd encourage you to look at CTG. CTG and Photon at Future Path would both be good for larger accounts. So this is the so I'm looking at the September contract, because the Eurex doesn't have a continuous contract. So to get the data, you have to roll it, and I don't trade the DAX often. But if you can see here, so price in the Sep contract was trading at 12,471. Value for the last 5 sessions is 12,388. We're above that. That's also value for the last month. So, I think there's opportunity to be long DAX, and basically the bias is to the upside so long as it holds this level. So if I was looking for swing opportunities, I would be looking, I would get nervous to the long side if I got acceptance below 12,388. I'll look here at a longer term chart just real quick, just to confirm this. They've had it. The other thing that I'm looking at is looking at the monthly profile. It doesn't have any, really good excess to the upside. So this is like an incomplete auction, and we've actually got some prior profile levels up to like 12,599. So that would be kind of a target area that you'd look for, as long as you could hold value here for the month. So that's kind of a good way. So again, I don't trade the DAX, and that's exactly how I would trade it right now. So you guys, this works for any product, any and every product.
Yeah, really good. You may get this here in the next push down if they can do it.
Yeah, all right, we're getting close. We're getting close.
Any other last questions, guys? How can we easily distinguish or compete or incomplete profile? Well, it's day type. Peter, that's what we call day types, and we're always monitoring the type of day that's being established. Now, we'll sometimes, if it's in your plan, I won't personally do this, but if it's in your plan on day type, then that will help some people with their trade plan, because they'll look for that type of day type and then they'll trade off of it. So I think that's what you're asking in your question. And a complete or an incomplete profile is a day type, in my opinion. Josh, would you concur with that?
Yeah, I would agree that's part of it. I think the other part of it is, so a complete auction has met equilibrium in terms of the distribution of buyers and sellers within a specific time frame. And so when you have, and this is one of the things that we look for in a profile, is that you have I'll draw it over here, is that when you have a bell curve, okay, where you have unfair lows and unfair highs, that's often a complete auction. It means that the auction was able to, go this way enough to find that it couldn't facilitate trade. And it was able to go this way enough to find that it couldn't facilitate trade. And so that's a completed auction. It's tested both directions, and then, find some equilibrium typically in the middle. Now that can happen intraday, like this day back here. That's a complete auction. Sometimes the auction is not allowed to complete in the given session, and so it's because it's part of a multi-session auction, and that's kind of what I think is at play going on here in the Nasdaq, especially if we can return back towards these composite levels. Is that the auction, even if you look on the Fed, because we had FOMC this week, so you had an attempt in the auction, lower, and now you've had an attempt in the auction higher, and now the auction's coming back to balance and equilibrium. So that's a complete auction, and that basically is telling you, hey, now and into next week and subsequent sessions, the Nasdaq's going to be looking for the establishment of a new auction. Okay, it's going to be looking for a new expression that this auction is now completed, and price action has allowed that to happen. Great question. All right, gang, we're done. Stops now 70.10 or 79.10. We're getting close. We got OCO running 78.90, 79.10. So we locked it in 35 points, and we're
beautiful. It's a good Friday.
It's a good Friday.
We're not talking about the April one.
Yeah, yeah. A couple next steps for it. If you've not yet part of our community, we encourage you to spend if you're a trader who's still working on that consistent profitability, spend a week with us, experience one of our pathway modules and our daily trade plans. We do about 5 hours of sessions throughout the week. We'll look at a specific anchor trade, one of those IB trades, and you can see some of the tools that we use to help accelerate you in your process. If you're not yet following us on Twitter, although I imagine many of you are, we post daily decision levels for the ES, typically sometimes Crude, on Twitter and Facebook. And then if you need help or have any questions about this session or anything else, you give us a call at that number, which also accepts text messages, or you can send us an email at team@tradewithprofile.com. That's it, gang. We're here to help traders learn to profile, make better trading decisions, take profits. Hope it's been a helpful session for you. We will send the recording out sometime this afternoon, and we'll hopefully see you next week. Peace.
All right, guys, take care.